So, man, what podcast is this?
19.
Anton Sentner podcast number 19. Today's topic, Airbnb, specifically Airbnb in Seattle, and the current trending headline that Airbnb is crashing. So is that true? Is it not true? And let's dive into the details for the Seattle market.
Absolutely. So really, it's interesting. This is spreading like wildfire all over the internet. There's a whole bunch of tweets about it. There's a whole bunch of videos about it. So I sat down and dug through all the data this morning. For those of you who don't know, I'm a data nerd. I like numbers. I like how things work. I went to school to be a biochemist. I was trained to be a scientist who happens to just sell a bunch of real estate and love investing in real estate. So here is basically a summary. A massive Airbnb liquidation is expected in the United States housing market as declining revenues force owners to sell, potentially causing a housing crash crisis. Bum, 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 bum. That'll be similar to the subprime crisis in 2008. Well, before we get there, so that's just kind of setting the stage. What's Airbnb? What's VRBO? What's STR? So all of this falls under what's called the short-term rental category. A short-term rental is where someone is going to treat it like a hotel. They're going to go and they're going to stay there 1 night, 2 night. And I think in our area, the average stay is 4.2 nights in the Seattle metro. Airbnb is the biggest player in the space. They control about 80% of that market. The second biggest player in the space is VRBO, vacation rental by owner. What happened is during the COVID-19 pandemic, you had this space explode. Prices went up, values went up, and demand went through the roof. So all of a sudden it became the hot trending topic for everyone to own an Airbnb. And all of a sudden there's all these classes and courses and magic gurus that are 22 years old that tell you that you can live in Europe and make $42,000 a month doing nothing on Airbnb. So that's the FOMO behind this. And so right now there are approximately 1.39 million short-term rentals here in the United States. And for perspective, there are 144 million total housing units. So these short-term rentals, or Airbnbs, they make up about 1% of the total U.S. housing stock. So keep that in mind when people are talking about a crash. We're talking about 1% of the total available stock of homes. Now, here's where we got to go into some psychology here, right? Prices, wouldn't you agree? They feel unaffordable to everyone right now.
Definitely, especially with interest rates of mortgages.
And so interest rates are just making this work. So we got unaffordable, high interest rates. We got rents that have increased at a record pace. We have big corporations and hedge funds stepping in and buying up single family homes. We have builders that slow down the building. So the general public, from just sheer emotion in my heart perspective, wants the crash to happen. And I'm going to say, I'm with the general public. I want a crash to happen too. See, when crashes happen, we build wealth. Okay? Changes happen, you build wealth. Anything that's a massive change is an opportunity to make some money. So I want this to happen. The data's not quite there. Reventure Consulting posted this. Their source of the data was all of the rooms. And they talked about how a lot of these areas were having approximately a 40% drop in these major metros in their revenue. So they view revenue as what they call RevPAL, revenue per available listing. That's what RevPAL stands for. Rank number 2, Phoenix, Arizona, RevPAL went from $5,569 to $22,939, a 47% drop, according to this data. Austin, Texas, a 46.1% drop. Our backyard, they're saying the Seattle Metro, 35.2%. Now, if I say something here and I say it incorrect, or you're experiencing something different, or even how you're feeling, I want you to put it in the comments below about what you're seeing or what you're feeling in relation to your own personal portfolio. Then what happened was AirDNA fired back. So Jamie Lane from AirDNA, he came out and basically rebutted this viral tweet. And he said, let's get some facts straight. There is not a collapse in RevPal happening? Is it a downturn in 2023? Yes. Okay, we've talked about this on previous episodes. Consumer spending is going down. We've got a little bit less cash, so it's no surprise that Airbnb revenue is going down. Going back to what he said, is it down 40%? No. So he pulled the numbers from AirDNA and had that data set mirror this exact analysis. So what did he find? He said the average listing is seeing a RevPal decrease of 3.6%, not 40%. So a 3.6% decrease is not a crisis. It's not a crash. It's not going to cause a freaking collapse to happen to the overall US real estate market. Okay. So we mentioned Phoenix before. Phoenix, they show down at -3%. They show Austin down 7.2. Now 7.2 is a lot. Okay. A 7.2 drop in revenue in Austin, that's a big deal. Seattle down 6%, also a big deal. And so we know that this is not crashing, right? We know that Airbnb represents 80% of this market space. But you have to kind of let's go back into the psychology again for a second. What'd you do during COVID?
Stayed home, isolated initially, but then wanted to get out and go somewhere.
So you want to get out and you want to go somewhere, and it didn't necessarily feel safe to go to a hotel.
Oh yeah, definitely. Even if I wasn't as worried, I wasn't trying to get in an elevator with
Bingo.
people.
So that emotion is what caused this surge in Airbnb is, oh, I can go to somewhere private and I can stay there and do my vacationing. The second thing that caused this surge is humans, unfortunately, we're pack animals. My homie's doing it, I want to do it. Well, when your best friend looks over and says, and they don't own any investment properties, and they go, hey, I'm going to go buy a vacation home in Scottsdale, Arizona, aka the Phoenix Metro, and they haven't done the numbers, and their excuse is, well, we're going to use Airbnb to help justify the price, and they're spending like $1.5 million, $2 million for it, and you go, wait a second, that's more expensive than the home you live in now. That should cause some fear. That should cause, oh my goodness, prices have to change. So whenever in a market cycle, you've got a massive increase in prices or a massive increase in demand, what goes up must also come down. So therefore, you're seeing a price normalization happening in these major metros. And Airbnb, they go, you know what? We've got to address this. P.S. Their stock dropped 11% because of this.
Because of this tweet?
Because of this, yeah.
Oh, dang.
Yeah.
Buy some Airbnb stock there. Maybe.
Schmaybe. This is not financial advice. So Airbnb spokesman comes on. I want to actually read this quote from Sam Randall. He says, this data is not consistent with our own data. As we said during our first quarter earnings, more guests are traveling on Airbnb than ever before. With nights and experience booked growing 19% in the first quarter of 2023 compared to a year ago. Okay, what does he not mention? Revenue. So they avoid the revenue thing and they find a metric that looks good to say, hey, our business is still growing, everything's okay. When AirDNA is showing revenue going down. So I think Airbnb is going to get a little more beat up as their second and third quarter earnings come out before it gets better. So if you want to buy, I'd probably wait unless you just want to take a gamble. But when they didn't directly address the actual changes in revenue, there's items possibly hiding behind that curtain. And so we are data nerds, right? So if you want to connect with us, you can text Anton to 425-386-7854 if you've got questions in regards to this. The last part of this, just to kind of finish with this idea, is there was a FOMO. There was the rush. There was the COVID pandemic. So that surge that came up, you're just seeing it go back to normal. But there's always going to be places in a market that have oversaturation. So would I still buy an Airbnb today? Possibly. Okay. I need a backup plan though. So I need to be able to buy an Airbnb and then have it also work as a long-term rental. Then I have a safety net there. Okay. And I need to buy an Airbnb where I can create a destination and an experience. And I know that I can provide the level of professionalism and customer service in order to beat my competition. So what you're seeing is the competition's gotten fierce. So if you're going to continue in this short-term rental space, you have to get better with it.
Yeah, a couple of questions about this because, of course, even if you're not an expert in real estate and set aside these headlines, the tweets, what people are reading, we all know that real estate generally is slowing down and we're coming off of that huge bubble of the pandemic. So it would seem obvious that people that jumped into Airbnb because of FOMO, because they heard this person making a lot of money, that there could be some sales from people that were wannabes and not real players, okay? But it's not happening. Would you say that some of the reasons are the same reasons that are affecting just general buyers and sellers? Low inventory. They got those homes at a super low interest rate. And though they might get stressed out a little bit because they're not getting maybe as many bookings or they're not able to charge as much, it's not dramatic enough to where they have to completely bail because of those factors, right? The low inventory, they got in a low interest rate, now it's a higher interest rate. And in fact, they could actually sell the property potentially for a profit. That's kind of crazy to think about that. And like you said, maybe it's not an Airbnb anymore. Maybe it just turns into a rental.
One of my friends who owns 7 short-term rentals, and she owns 2 in Phoenix and then manages like another 7 inside of that metro, is unloading 2 of her Airbnbs right now because her revenue is down, exact numbers, 18% on one and 21 on the other. But she's in one of those overcrowded markets. She has equity in both of them. So instead of converting them into long-term rentals because it's hundreds of thousands of dollars worth of equity, she's simply going to sell both of those. Her Glendale house already has multiple offers on it. She texted me that this morning. And so she's going to simply 1031 that money and go into a 6-unit or an 8-unit multifamily. That's the more likely scenario here, is these people have equity, they're ready to go. Now, conversely, at the upper end of the market, with the luxury Airbnb, I think they're going to get hit worse. And there's also ones that, so one of the ones she manages is not far from ASU. So it's near one of the stadiums. So it's just always renting out, location, location, location. So there's some fundamentals of real estate that people just violated because they wanted a second home. Go back, do the numbers, okay? Sell it, do something, but you can't just go buy something because you want it. You have to justify it and then have a plan B and a plan C. And I think that's what's going to create that safety. And at the end of the episode here, we are going to talk about ways to capitalize on this, because even though there's not pain today, I think we're in the beginning of the pain, and there's going to be opportunities over the next 6 months to buy some of these.
Would you also agree or disagree with the case that one of the reasons some of these headlines go viral and people want Airbnbs to crash is because some homeowners don't like the Airbnbs in their neighborhoods.
Oh, yeah.
Some people complain about the people that rent them and maybe have parties and trash the neighborhood or just don't respect the community. So that sentiment just further motivates people to not just pray and hope for it, but also to push that narrative. And you have to separate the I want versus what's actually happening.
Yeah. So phenomenal question there, Benji. the emotion makes us want to happen, makes the crash real to us, and then we're justifying it. The data says there's no crash, there's a decrease in revenue. And to see this, I mean, as I was doing the research for this, all you had to do was look through the comments on Twitter and the comments on YouTube, and 75% of them were exactly that. Something very negative. Someone literally wrote, "I hope you piss off and burn." Okay, YouTube has some awesome trolls on it. And another one said, "Good, greedy landlords. It used to be cheaper to stay in an Airbnb. Now they're more expensive than hotels." And so people feel this vindication, this righteous rage at, oh, those bad Airbnb. And also realize there are quite a few cities and counties passing restrictions on these that are going to naturally limit some more of this competition.
All right, so just one more question on that note. I remember going to Anaheim, where obviously there's Disneyland, there's like some amusement parks. Airbnb, probably one of the most popular places to have one, and even to this day.
Yep.
But years ago, decade ago, even just before the pandemic, lots of challenges. I swear, the kind of things that I was hearing and reading, it almost seemed like it was going to be impossible. Hotels are complaining about it. Again, neighbors don't like having it. Yet, if you go to Airbnb today or Vrbo and you look up listings, a ton. Almost seems like a record. And the reason I bring it up is there's such a high demand for it. Yep. Even with us coming off the pandemic and people staying at home, people are still traveling. It seems like Airbnb is here to stay. So even if you're hurting right now, it's not forever, right? And like you said, it's a new normal. What are your thoughts on just generally Airbnb's future? And then let's get into some of these other like local data pieces.
My thoughts on Airbnb's future is simple. You have to make a simple comparison. Did Uber disrupt taxis by creating rideshare, by creating taxi on demand, and did all of that stuff already previously exist? So we already had apps, we already had GPS, we already had cars, and then they built a infrastructure to stand on the shoulders of giants. So that turned Uber into that juggernaut. Well, what is Airbnb doing? Hotels already exist, consumers already exist, travels already exist. I just want a convenient way to be able to check in. So I think if you look at how successful Uber has been, and of course the other ones, Lyft and things like that, Airbnb's here to stay. And with it only representing currently 1% of the market, it's probably has room for growth. But like anything, see, as humans, we think a growth rate is just a natural curve. A growth rate goes up, it comes down, up and down. And so you've got to build things in to be able to withstand those storms and those changes. Long term, phenomenal business model. I don't do Airbnbs personally because they are high management and labor intensive. And that's not my model. I want to set it, forget it, make money, go do another deal. Will I do Airbnbs in the future? Absolutely. But I will literally buy 5 of them all at once so I can employ one person to take care of them. Because if I start getting text messages or updates from a stupid app saying what's the check-in time when it's already written on there.
I'm that guy that's always texting the owners too. Like, hey, does it have this? Why is there no air conditioner?
But those types of things would just drive me bonkers. It wouldn't matter if I made an extra $1,000 a month. I'd just rather have the long-term rental. So the next topic that we're going to talk about here is really, could this, actually here, I'll let you say it.
Okay. So, all right, next topic is, could this decline in revenue for Airbnbs and STRs, short-term rentals, crash the housing market?
Yeah, so their hypothesis is, oh my goodness, Airbnb is having problems, so it's going to crash the housing market. Once again, the emotion plays into the narrative. People want the affordability to come back into place. And I want it for them too, because I want to buy more properties. The answer is no. So if we have 1.39 million short-term rentals, Airbnbs here in the United States, and there's 144 million housing units, once again, it represents about 1% of the total. The foreclosure rate in 2022 was 0.23, so not even 1%. Our lowest foreclosure rate in decades, and the foreclosure rate is slightly up, in 2023. For perspective, in May, in Washington State, there was a total of 239 foreclosures in the whole state for the whole month. So we ranked 47th in the nation in the number of foreclosures. But Anton, if all the short-term rentals came on at once, well, let's take the 0.23 and let's add 1.4 to it. That would put us at a 1.6, 1.7, somewhere right in there. That number means nothing to the average person. The foreclosure rate in 2007, at the start of the Great Recession, was 1.0%. The foreclosure rate peaked in 2010 when we saw all of the price drops at 2.23%. So that subprime tsunami that caused the last crash, the mortgage-backed securities, the bad debt, the ninja loans, all of that stuff that we had going before is what caused that massive decline in prices. If every Airbnb hit the market today, we wouldn't even get close to the peak. And so it was 1.84 in 2008, 2.21 in 2009, and 2.23 in 2008. And it was multiple years, 7, 8, 9, 10, 11, and 12 and 14 where it was over 1% that caused that massive price decline. And we know when we just think about it logically, even if Airbnb was pushed really hard, that whole market, and revenues did decline 30%, would all 1.4 million hit the market at once?
No, and they're not going to all foreclose at once either.
Bingo. And so you have to throw this out as fear. You have to throw it out as the crash bros, as people using some data to get clicks and sell ads and sell their version of the truth. But the truth isn't the truth until we have multiple data points from multiple different areas telling us a story. You can't rely on one piece of information. So what will those people do? What's gonna happen? And we're gonna get to the options on what they're going to do, but we just know it's not all going to hit the market at once. It's just statistically impossible. Okay, so is it going to crash the market? No. Do I wish it would crash the market? Yes. We could all make a lot of money and it would make housing more affordable. What could crash the market? If interest rates were to stay, and they haven't got there, but this could do it. So you see the real estate market slow down as it gets above 7%. It hit 7.22 this morning because of the economic news that came out that was just too positive. ADP released their payroll data. It destroyed expectations. 200 and some odd thousand more jobs than they expected. Mortgage rates shot up to 7.2. Not going to crash the housing market, could cause it to start slowing. But if interest rates were at like 8, 8.25, 8.5, and they stayed there for 12 months, a year and a half, 100% we could crash the housing market with that. Because we've already shown from the data in 2022, the housing market stalls out over 7%. So if the Federal Reserve had the guts, and I don't think they do, to push interest rates up into the 8s and keep them there for a year, they could absolutely cause a 20% drop in prices.
Can you break that down or kind of like play it out? Why would high interest rates for a long period of time cause a real estate crash? So if we just go back and look at the real estate market nationally, interest rates went from 3% to over 7%.
as the Fed basically just sat there and raised and raised and raised. As it was raising, what you saw is there was a moment in time where interest rates crest 7. When interest rates crest 7 and they were sitting at like 7.1, 7.2, and 7.3, the real estate market ground to a halt. Transaction volume went down, days on market went up, active listings went up, and massive price reductions started happening.
So sellers were not able to move their house even though there was demand because buyers couldn't afford those houses.
Bingo. Sheer affordability killed off the ability to buy. So you have to, let's just think about this a different way. Right now, with interest rates being they were just in the upper 6s and, around 7, that took away about 40% of the buyer's ability when interest rates were in 3s. Okay, because it's essentially that much more money. The problem is once it crests like 7.2, it becomes so unaffordable that number, and now this is a wild ass guess, that number is probably dropping to like 50% of the people can afford it. There's not enough demand at that point, and prices start slowing down. You also saw the total number of real estate transactions get down to a running average of around 3.9 million. 3.9 million is the housing market stalling out. We're at about 4.1 million, 4.2 is the run rate right now.
And so one more thing, going back to Airbnbs, if Airbnb owners that bought because of FOMO and they need an out can't sell their houses, that could be the beginning and it would just make the problem worse.
If interest rates stay high.
That's what I'm saying. If you play it out, right?
Bingo.
Like if it was like at 8% for the next 12 months because, they are trying to fight that inflation rate.
If consumer spending goes down, if the M2 money supply goes down, that's the amount of cash that people have in the bank essentially. If interest rates stayed over 8%, yes, the Airbnb could be like the catalyst, but it wouldn't be the thing. It would just be the lowering of the barrier that started it. The media would blame it when they'd say Airbnb did it, but technically it would be affordability and all of those items added together. But I don't think it's going to happen. I think the Fed is done with us, and we're going to find that out on, I believe it's July 12th, that they were probably just bluffing. Even if they weren't, you got to think of this in terms of overall jumps. So we went up 500 basis points or a 500% jump in the Fed funds rate, which causes mortgage rates to go from 3 to 7. If they raise it another 50 basis points, who cares? That's only 10%. It's such a small amount relative to the jump they've already done. It won't make a big impact. And most of it's already priced into the market anyway. So people need to ignore this fear. They need to get their ducks in a row. They need to get their credit going. They need to get their down payment rocking and rolling and be prepared to buy and start hunting today, because like we've been talking about, the opportunities have already started and you're going to miss them if you don't get moving. Or you could listen to bad data that's telling you a good story.
Okay, Seattle. What's going on in Seattle? And what are the options for Airbnb owners?
Because Seattle's our backyard, we wanted to actually dig into these numbers. Is Airbnb crashing in Seattle? So right now, Reventure Analysis, they said it had gone down 35.2% from the data from all the rooms. And in Seattle right now, it appears, according to AirDNA, that the RevPal in May of 2022 was $2,643 a month, versus in 2023, it's $2,484 a month, or down 6%. So that's not a crash, but that is getting hit harder than some of the other metros. So I went in and I looked to see how many active listings there are. There are 6,371 active listings in Seattle proper. So not just the whole metro, we're talking Seattle proper. What that is an oversupply. That is too much. That's what's causing this change. And so the thing that's happening here is the average daily rate in Seattle is now $188 a day. So clearly there's more competition. If you want to stay in the Airbnb game or the short-term rental game, you've got to elevate what you're doing. You've got to elevate your professionalism. You've got to develop other ways to attract people. And here's just a couple quick ways to do it. One, do you have a unique property? So those ones that are shaped like boots or made out of a bus or a weird tent in the middle of somewhere, those are what attract people.
A weird tent in the middle of somewhere.
So there is an Airbnb listing, and I'm not kidding. It's a tent on a hillside over in Eastern Washington, and you can rent this tent in the middle of nowhere on a hill, and it rents for like $85 or $90 a day because it's a set-up tent campsite. How much did that cost that person?
Not that much, and plus the land was cheap. Bingo. I was more imagining like a tent in the front yard of a house in downtown Seattle. I'm like, I'm definitely not. I don't see the appeal in that at all.
The homeless guy walks by. Is it a destination property? Do you have professional photos? Did you do professional design and staging? Do you have better amenities than your competition? Have you analyzed the competition? What's their price versus yours? What's their availability versus yours? Do you provide better customer service? So one of the ways that you're going to stand out is becoming one of those super hosts, providing better customer service, and getting people what they want quickly. Last, and I think this is probably one of the most important games that I think a lot of people are sleeping on right now, is are you automating your Airbnb through AI and creating a better customer experience? Like, what would it look like if you created a chatbot just for each one of your Airbnbs who knew everything about the property, and that person could simply text in and ask them questions and you didn't have to answer it? The response was instantaneous. So the consumer's getting exactly what they want. I think that's going to be the game-changing stuff, for people. Is they've got to be different, they've got to stand out, they've got to provide that service, and they've got to be the professional.
What's interesting about you talking about this is the correlation to real estate listings. Back in the day, you could just like become an agent in a month or so or whatever it took you. Just get your family and friends that give you some listings, buy through you, and then you potentially could be a millionaire, right? In a couple of years when it was like hot. But you weren't really doing justice for the properties. You kind of didn't even have to. Everything was just happening so quick. The way to stand out was those professional photos, right? It was answering the phone and helping people, especially when it got competitive. And at the end of the day, you have to think of yourself as the buyer of these properties, right? Just like your potential renters of these Airbnbs. You're going to go to the thing that looks more pretty, right?
Always.
You're going to go to the one where there's not like really bad grammar or just like not a good description, a lot of details. And then if there's a lot of options, you're going to maybe respond better to the one that responds to you. So if you
Bingo.
do ask something and they're immediately like telling you this and that. I even recently, I rented an Airbnb when I went to California, and I remember I didn't get any response to my first question, literally, so for weeks and weeks and weeks. And then it was a few days before, and me and Judy were worried because we didn't get a response. Like, this might be a scam. So like the psychology of not communicating is really destructive, but it's also maybe underrated and powerful.
Bingo.
Just responding. So all these things that you're saying. And the reason I bring it up is it's so easy to overlook when you've got doom and gloom on your mind and you're just like, I'm out of here. A few little tweaks could just set you apart, even with a subpar property or one that's the same as somebody else. All these kind of other things, because isn't that the way it is in real estate? You can tell when there's a seasoned agent that's a professional versus somebody that's a wannabe and just kind of doing this for pure profit.
Bingo. I think with this, here's my advice. Look at this the way RESG looks at everything. Go create a simple spreadsheet figure out who your top 5, 10 competitors are, message each one of them, see their response time. Go in and open up an app that will do a character count and copy and paste and figure out the character count or the total number of words written in their descriptions. Write each one of your descriptions larger. If the average listing has 50 photos, you do 100. If they have okay staging, you get professional staging. Also, one of the things to notice is like the ones that have like a vibe or a theme. Just going back to Scottsdale, I was looking at this one in Scottsdale, and it had kind of this like 70s Las Vegas theme to it, and it had this little bit of like retro pink and retro green, and that kept popping up throughout the home. And I'm looking at these Airbnbs in Scottsdale, and I've got that one versus the competition, and I just kept coming back to it. Because the theme, the colors, the description, the photos is what was pulling me in. So if you go through and you just kind of make this arbitrary ranking thing, by doing that homework, you're going to know what it's going to take to beat the people. Or if you go, you know what, I'm not willing to do that, I need to get out. You may decide, this is too much work for me. What I want to talk about next are what are the options if you own an Airbnb and you're seeing these declining revenues. So simple. Your revenues are going down. Now what? Let's get more professional. Let's get professional photos. Are there little ways that I could increase my revenue? So maybe it's not having a 5-night minimum stay. Maybe it's having a 2-night minimum stay. Maybe I increase the cleaning fee. Have you recontacted and reconnected with any of your previous guests? One thing that people do with the short-term rentals, I think is just downright lazy, is they don't have a mechanism by which to capture the information from their existing guests. Maybe a nice little sign-in book inside, or something. To get the Wi-Fi code, they have to give you your email. Okay. I don't know if any of this violates Airbnb's rules, so double check on these things. I'm just telling you what I would do. But get their contact information one way or another, because you want to be able to reconnect with them and offer for them to come back. You could also just wait. So if a market's going up and it starts to come down, will it eventually go up again? It absolutely will. Yeah. So sometimes, as long as you have prudent cash reserves, you should be able just to wait out the storm, because some of your competition is going to die off. Possibly, depending on your interest rate, you might be able to refinance it. Now, I realize for 80% of the loans out there, this one is not going to apply. And there are commercial debt Airbnb properties out there that have high interest rates. What would it look like if maybe you converted it to a midterm rental for corporations, for people who have insurance claims, for traveling nurses? Maybe you convert it to a long-term rental. Also, I know we've mentioned this before, but you shouldn't buy an Airbnb unless you could convert it to a rental as a backup plan. If the numbers only work as an Airbnb, that's too much risk for me. Last, and this is of course the option that we don't like, you could just sell it. You could sell it and be done, because most of the people who bought these, as long as you didn't buy it in 2022, are going to have equity because of the appreciation that we've seen here in the United States.
And also because inventory is so low. We're not seeing the crash that one we thought we were going to see last year, and two that we had back in 2008, 9, and 10.
Yep.
That would make this probably not an option, right? Because it would turn into a short sale or potential foreclosure.
Inventory is historically low throughout the United States, so you can most likely just sell it and be done.
Last question. How do we profit off of all these headlines saying Airbnb is going to crash? What's the opportunity here?
So for those of you that have stayed this long, we love you. Like, subscribe, leave your comments, reach out to us if we can help. And how do we profit from this fear, Airbnb crash, the problems being created right now? And what can we do? So there's always a way to make money on this. So if you're an Airbnb owner right now and you have a decent sized portfolio and cash reserves, the first thing I would do is I would go onto Facebook, and I would become a member of all of the local Airbnb groups. And I would say right in there, if your Airbnb is not doing well, let me know. I'm a buyer. I would also create a vertical video, a short, a reel, whatever you want to call it. And I would say the exact same message. And I would run ads against people who say they're interested in short-term rentals, own short-term rentals, or own Airbnb or do VRBO. Yes, I realize some of that population is not the owner, but I'm just trying to get leads. The next thing I would do is I would contact a title company or use some sort of a data service to create a list of non-owner occupied properties in my area with out-of-state owners. Now realize that some of those are rentals and then a portion of them are short-term rentals. I'm then going to skip trace all that data. Then we're going to do what we always do, buy, sell, die, or get a restraining order. I'm going to hit each one of those leads 20 times, and I'm going to email them. I'm going to text them. I'm going to send them a social message. I'm going to send them a handwritten note. We're going to send them letters. And then quite possibly, just like I did before we started this, I'm going to go over there across the street and I'm going to knock on the door and talk to one of the neighbors about a home that, might be down the way. Also, join regular real estate investment groups because they're going to be the people who are going to know about the short-term rentals. You could always go on to these platforms. You could message the owner and you could say, hey, let me know if this isn't doing good. I'm interested in buying. By the way, I'm going to be in town on this day and I'd like to stay here. You're then going to find enough deals so that you can make some offers, analyze those deals, and keep the great ones. This is not the market to buy an okay deal. This is the market to put in a lot of work and to buy the amazing deal. Some of these may not work as an Airbnb and the owner may be done, but they may also work as a long-term rental and that owner's so emotionally done. What if you could come in and just buy it subject to their existing mortgage at the low interest rate, wrap their mortgage, keep the property and just hold it long-term? See, what happens with investors is when they hit a wall and they're new and they're not used to these cycles, is they go through this emotional rejection phase where it's denial. They don't want anything to do with it. They're just going to run away. Well, hey, I'm here to buy your property. I've got to get a good deal. Here's what the deal looks like. Are you willing to do something like that? You just need to be known as the guy or gal in your area who buys these properties so you can create that deal and create that opportunity when it becomes available. Because even though the numbers say it's a 3-4% drop in revenue, let's assume it keeps going. And let's say the average Airbnb drops 10-15%. That's going to put people out of business. That's going to create opportunity. So you need to be creating those relationships now. And then you set them on a drip campaign where you just simply follow up once a month and keep checking in. And if I had 200 people who owned Airbnbs here in the Seattle metro, and I was following up with them over the next 6 to 9 months as the economy continues to get worse and consumer spending goes down, do you think I might get a deal?
Definitely. And one of the low-hanging fruit here is what you said, be the professional in a game where there's a lot of just hobbyists.
Yeah, so hobbyists, amateurs.
People that got into it not just because of the FOMO, because of the easy money, right? They had a property manager because the margins worked out. They didn't do anything, right? They just had their name on title. They had a mortgage and other people did the work. Well, as things get more competitive, even if the numbers work out, but it's more of a headache, they might just want to get out. And if you're the professional that not only can be there to take on that opportunity, but turn it from like that wannabe, using your phone to do the listing pictures, maybe only 5. The owner never responds because it was kind of all automated, but now he has to do it himself. Now they don't want to clean it. And you're that person willing to go treat their property the way you treat yours because you are a pro and you're doing things at the highest level. Like you said, you're creating a vibe, there's a theme, you're spawning right away. That is the low-hanging fruit, in my opinion.
100%. That's
going to be even more prevalent in the next 1, 2, and 3 years. That doesn't necessarily mean it has to be underwater or unprofitable. It's just now you're the person willing to hustle and put in the work. They just want to get out real quick. They want to clean their hands. They're like, hey, it was good while it lasted for 2 years. I think the next video is about the people that have those 2.5%, 3%, 4% mortgages.
Oh yeah.
And the opportunity there. But that literally will be a whole hour-long conversation.
When we'll just sit around and talk about how to buy other people's properties without your income, without your credit, and how to just come in and grab it.
Like ninja loans, but legit. Okay, that'll be next week. Any last words?
Don't take one data point as fact. This market is changing like the rest of the market, and there's opportunity inside of that. And so that opportunity is to move from hobbyist to professional, and to learn the market and then use your knowledge of the market to find amazing deals, because that's how we go find them every day. We know the market, so it's easy for us to make decisions about real estate because we understand what's a deal and what's not. And it just takes time. Go put the work in.
Can't wait for next week.
Sounds
Talk
good.
about those ninja loans.